Hello everyone, welcome to your weekend report for the 30th of May. So today what I want to pick up is basically where we left off in the last session, where we went through kind of where the market's at the moment. And what we really touched on is in particular with our short-term holder and long-term holder net unrealized profit and loss, for want of a better term. What we're looking at here is how much profit remains left in the system, categorized by these two groups, where short-term holders are essentially people, and we'll look at a metric shortly that'll really demonstrate this, but where we are at the moment in this mid 30,000s range, this is actually the definition of where long-term holder and short-term holders are, because roughly 5 months ago, we were at this exact same position in January. So where we are at the moment is what we're at a very, very important level, because on the short-term holders, so this is short-term holder net unrealized profit and loss, you can see that essentially they are all underwater, right? We're below a value of 0. So we're down below 0.25. The current value is 0.35. So what that's saying is that 35% of Bitcoin's current market cap is at a loss and held by people who've held good coins for less than 5 months. That's a pretty dramatic statistic, right? So 35% of the current market cap is underwater. This is a non-trivial sum. There is a substantial amount of value in short-term holders. Now, some of these are going to be hodlers who aren't going anywhere. Some of them are going to be new institutions who aren't going anywhere. A good portion of them are going to be people who are going to panic sell. So a large volume of this is probably going to be overhead supply. And this is what I was touching on, that it may take us time to work through this, work through the current price action. Now, really, there's two questions that we need to ask, and what I really want to put some color to. And again, whilst I can't see the future, I'm certainly trying to understand the most likely scenarios. The two questions that I'm trying to answer is, are we going to keep going lower? And if so, what does that look like? And what kind of market structure are we in? Are we in a bear market? Are we in a genuine 2018 style bear market? Or are we essentially in a longer term consolidation that's more or less a bull market pause? So they're the two questions I'm trying to answer. And ultimately, the way to answer those is look at where is the supply going to come from? So who is going to drive enough supply to just nuke us, right? Send us down to 20,000. Where does that supply come from? So my view is that this is a horrible capitulation for short-term holders, and that's good for everybody because you want these short-term holders flushed out, right? If you're a weak hand, it's highly probable that you've already panic sold. Now, yes, there's probably going to be people who are at their cost basis right now, right? Short-term holders who are just transitioning to become long-term holders. People who are still holding on but going, God, I wish this thing rallies. So there's going to be some short-term holders that have not yet sold, but a very large portion of them most likely have. Now, the other source of supply is long-term holders. And what we mentioned from this chart is that historically, 0.75 is more or less where long-term holders have transitioned into a bear market, where they've seen enough paper gains evaporate. They go, you know what, I'm just going to step away and wait for this thing to work itself out. Now, my gut feel is that long-term holders in this cycle are probably more strong hand than they've been in previous cycles because the macro thesis is so real. So I'm actually less concerned about the long-term holders. I do actually believe that they will continue to buy. And I would almost lump the Goldman Sachs and the Morgan Stanleys and these banks that, again, this is my speculation, but my gut feel is that a lot of this sell pressure is engineered to an extent, because I believe that they want cheaper prices for an asset that they are highly incentivized to take trading fees on. Yep, they want Bitcoin to exist. Ben Hunt in Epsilon Theory wrote an excellent piece on this. If you haven't read it and you're interested, just ping me. But he put out an excellent piece talking about Bitcoin with an exclamation mark and a TM. I believe that that's what Wall Street wants. And I think it's highly probable that they're going to be adding liquidity down at these levels, buying into this thing, because they're highly incentivized to capture trading fees on it, as this thing continues to trade. And I think they're smart enough to know this industry isn't going anywhere. So the way to wrap all that up, I'm actually fairly unconcerned just by thinking about this and mulling it over on the weekend. I'm fairly unconcerned about long-term holders. What I'm more concerned about is short-term holders, but I also do not believe that they have the volume necessary to drive us down into 20,000, right? So my instinct tells me that we're most likely consolidating at this point in time. Sure, we might chop down a little bit, we might chop up a little bit. It's probably going to be painful for people who are sticking around, but my honest view is that sat stackers are in a very, very good position. I think this is an accumulation range, a reaccumulation range, and we will most likely look back on this and think, gee, that was actually a really good opportunity. So we're currently sitting in a fairly substantial volume profile. Obviously, all the volume up here, some of this is going to have transferred down here, right? So imagine you're a short-term holder. You bought up at 55, 56,000. These people who are selling down here are capitulating, transferring their coins from weak hands who bought at 55 to strong hands who are buying at 35. The strong hands are buying twice as much as they were buying at 60,000. The weak hands are selling at a loss. And it's building more volume support down in this node. Now, you can also see that if we lose that node, it's a fairly steep trip back down to 20,000. So, again, remember how we talked about up here, we really didn't want to lose that 53.5. I think 53,500 was the $1 trillion level. We lost it on 2 occasions. That was a signal that we're probably going to go lower, right? So that was a bad sign. I'm going to make the same prediction. Well, it's not even a prediction, same call, same view that I really don't want to lose the low 30s. If we do lose the low 30s, it really is telling us that there's a large amount of weakness and people are just not stepping in to buy things. And really there's not much technical support. There's not much on-chain support between there and 20,000. Maybe at that point in time, we're back to filling in the entire triangle, right? So it's not an ideal scenario, but overall, I actually think that that's unlikely, right? Again, that's my gut feel, but that's certainly how I'm feeling. So if we look at our transfer volume, you can see that we've got huge numbers. I mean, we're almost at all-time high in terms of US dollars settled on chain. That's really good. That's people. So we're seeing volume on chain. We're seeing people depositing to exchanges. We're seeing people panic selling, but we've actually held this 35 level reasonably well. And the other one that I want to really highlight, here's our timeline metrics. Remember how we've talked about these ranging for a long time. ASOL breaking down like absolute crazy. Dormancy breaking down like crazy. Coindays destroyed breaking down like crazy. Binary Coindays destroyed is down. Old hands are not spending. Look at our spending waves, right? These are our spent output age bands. Old hands, not spending. 1 to 2 year, not spending. 2 to 3 year, not spending. Now, I don't know about you, but I'm happy to sit on the side of the strong hands, people who've held coins for multiple years. They, to me, are signal. People who are short-term holders are noise. So just to really back up what I was talking about in this long-term holder Knuckle chart, we're seeing huge volume. People are capitulating down here, transferring their coins from here to here. Short-term holders are selling at an absolute loss and currently at a loss. And at the same time, long-term holders are not selling a damn thing. This is a really, really positive signal in my view. This is telling us a signal that the long-term holders are not spending. You can see that the dark purple, so this kind of orange line you can see here is our 6 to 12 months. Then we're up in the 3 to, this is our short-term holders, right? This 1 hour, 1 day to 1 week. These are our short-term plays, and you can see that they're all expanding, right? You can see this break up higher here. You can see breaking up higher here. This is short-term holders capitulating, and they're not driving price down, and I don't believe they're going to have enough. I think buyers are going to step in and take this dip, and it's just my gut feel, right? I feel like we should have gone much lower if they were going to panic sell us down to 20,000. I could be wrong, but that's my gut feel. If we look at net entities growth, you can see that during this correction, it's actually expanded quite substantially. So we had a real lull prior to it, and that was actually a bit of a warning sign. A lot of this was capital rotation. People are punting on ETH and other things. But you can see that our net entities growth is actually expanding back to the upside. This is lagged by 1 week, so we have to see what happens during the next 7 days. But you can see that during this correction, there's been more entities created on chain. These are people withdrawing, creating new cold wallets, so on and so forth. The number of entities has fallen. So this is telling us 2 things. So the falling of net entities is actually the destruction of UTXOs. So what that means is that the people who purchased at higher levels are actually destroying their UTXOs by spending them. So this breaking down of actual total number of entities, whilst growth is actually expanding and our old hands are not spending, this is actually telling us that most of the people who accumulate, there's lots of UTXOs out there for people who accumulated higher. Now, when you are an institution, you're normally accumulating in large size, right? You might buy $100 million worth, and they might break that into a handful of UTXOs, right? They might put $5 million UTXOs, something like that. And that's really what we're seeing through this phase here. We're seeing lots of UTXOs, both retail and also institutions, but lots of new UTXOs being created on chain, and they're storing individual transactions. But remember those, what Glassnode does is they recognize MicroStrategy withdrew 10,000 BTC. They then split it into 100, 100, 100, 100. That's all one entity. So Glassnode's algorithm will capture that. This destruction of entities tells me that this is retail capitulating. This is lots of little UTXOs getting burnt, lots of, 0.1, 0.025, small UTXOs being spent, and that's weak hands capitulating in my view. So again, it's very hard to really discern a lot of this kind of stuff from on-chain data, but this is my gut feel, is that this growth in entities is actually new holders, new buyers stepping in to actually accumulate, whilst the number of entities declining is actually a lot of the spending going on by these short-term holders. If we jump back to our spent output profit ratio, our SOPR, so on the overall market, you can see that we've actually broken back down below zero. This is panic selling yet again. So we've got this massive breakdown. This was the capitulation. The whole market's then rallied higher, and then there's more short-term holders selling. So short-term holders continue to spend their coins, and you can see that this breakdown here is really lining up with this breakdown here. This is the destruction of all these young UTXOs that really people who are never going to hold long-term. And you can see that our short-term holder SOPR is very much the same, but still under zero. So short-term holders are disproportionately selling at a loss. And our long-term holder, you can see how long-term holder generally follows price, because basically if you're a long-term holder, anytime you spend your coin, you're going to be in profit. So it's always going to be a much higher value. You can see that our short-term holder and aggregate, they range, from somewhere around a value of 1. Whereas our long-term holder, this is saying that, the profit realized is 400%, 600%, 800%. So that's really what this metric is telling us. But you can see that normally it follows price, and it follows price fairly closely, but you can see how far we've deviated below. So this SOPR ratio is breaking down a lot further below actual price. And that's telling me that more coins are not being spent, and very much aligns with what we're seeing here, right? So profitable coins, when they're not being spent, the amount of profit being realized is less. So what this is telling me is that overall, there's always going to be some spending by long-term holders, but we're not seeing any kind of mass exit by them. So again, we're building up this thesis here that most of the selling here is short-term. We're not seeing a lot of long-term, and that's really the side of the equation I think you want to be on. And it's adding more evidence to this being more of a reaccumulation than a get ready for 20,000, it's game over. So this is kind of the case that I'm trying to build up, or at least where my mind is currently at. If we look at our percent of addresses in profit and our percent of supply in profit, this is really telling us what we really care about is the other side of the equation, which is how much is still at a loss. So on the number of addresses in a loss, we've currently got 73 in profit, so that's 27 that's currently at a loss. And if we look at the amount of supply, 70%, so 30% of the supply is currently at a loss. So that gives you a bit of a gauge on the kind of, how much spending is probable to happen, right? How much supply could come onto the market. Given where we are in the current cycle, where January, being 5 months ago, is kind of the boundary of short-term holders, 30% of the supply was accumulated from there up over this 50,000 mound. So basically from this point here, this curve in price is where 30% of the supply has been accumulated. Now, what we really need to see is how much of that are actually sat stackers who are quite happy to just hold on to this thing, and how much of that supply is actually being reaccumulated in this phase. And what we'll see is if we get any kind of break higher, remember how we mentioned the short-term hold, the spend output age bands, if we get a really nice relief rally, let's say something that takes us up to 50,000, right? 45,000, something like that. If we get a reversal on all of these long-term metrics, yeah, it's probably telling us that they're going to put in a second lower high, and it's probably going to sell off and go down lower, right? Now, what we will also see is these metrics, the amount of supply and profit, that will suddenly spike. Now, imagine that a whole lot of people step in and buy coins right now, right? Let's just assume, for example, we've got 30% of the supply at a loss. Let's assume 15% of the supply just gets bought right now, right? Michael Saylor steps in and buys a huge amount. If we get a very small price rally, we will immediately see this percent of supply and profit rally higher. It will jump as price goes above the buy-in level for all those coins. So what we will be able to see in short order, if we get a nice relief rally, we will actually get a gauge. We'll be able to see in these metrics how much supply has been accumulated at a cheaper price. So that's certainly something that I'm going to be paying attention to, because it'll tell us in that first relief bounce, which I think we will get just purely from a technical analysis standpoint. On that first relief bounce, we'll get a really good insight into how much value has been accumulated, and that will be a very good signal to tell us that a floor price is being put in. So that's one thing that I'm going to be paying attention to and watching moving forward, is how much value goes into profit on a very, you don't need much, right? Your price just needs to go above their move point, and then we'll be able to see. And that will help us confirm whether this is a reaccumulation. If it doesn't happen, if we get a rally to 45 and these metrics do not spike, probably more of a bear market case. So that's one thing to pay attention to. Good to see that our derivatives are very, very much staying flat. This is telling us there's not a huge amount of speculation. Funding is at basically zero. Open interest is more than 60% below the high. This is good, right? We want to see speculation get bled out of the market. Simultaneously, our miners are still accumulating on net, so they're not distributing their coins. Long-term holders, I mean, look at this. It's continuing to rally higher and actually starting to accelerate. These are people who, again, purchased in January and have not sold, right? If they're not shaken out by the volatility, yeah, they're currently at their cost basis, so things can change. But at the moment, these holders are essentially hanging on to their coins. So overall, net positive. Our short-term holder profit and loss. So remember how I mentioned at the start of this that there's some like basically January is the threshold, and we're currently at the price where some long-term holders are in, maybe getting into hot water. You can see here, sorry, hang on, stuff that up. You can see if we zoom right in, oh, hang on, what's going on here? Sorry, I've broken this. You can see that we're starting to get this light blue patch opening up, right? They're long-term holders who are at a loss. So you can see that we've basically had this, this nice dip. So this is our peak hodl phase, maximum long-term holders in profit. They started distributing. And what we're starting to get is some of those long-term holders who essentially bought here 5 months ago are now slightly underwater. So very much the same. When we get a rally higher, we will see this short-term holder profit line. If this drops dramatically, that means that a lot of people have accumulated at the current prices, 35,000. And because the transition point is 5 months ago, the long-term holders will tell us the opposite story. So really, we're at a decision point, and we're going to see a lot change. And actually, I think that the long-term metrics that we've got here are going to give a lot of signal when we get a single bounce in either direction. It'll tell us what long-term holders and short-term holders are doing, whether they're making some kind of mass exit or whether it's actually looking pretty green on the other side. So you can see here the illiquid supply chains. These are, again, coins that are moving into exchanges. That's definitely happening. You can see that our balance on exchanges is ticking higher again. This is one thing to pay attention to. There's no question that there's supply coming back onto exchange. I do think that people are still panic selling. I think there's the short-term holders. I still look at this trend and I think, man, this is a massive downtrend. This is a relief rally, right? I know you can't really look at these things on technical analysis, but overall, I think that this downtrend is still in play. This is a small upswing in a larger time frame downtrend, but again, we'll see how this plays out. It makes sense there to be some inflows as we're seeing a lot of volatility and things bouncing around and uncertainty in the overall markets. If we look at our hodl waves and our realized cap hodl waves, so one thing that I'm actually really looking into and paying attention to is this upper band here, this light yellow band, which is our 6 to 12 months. So I mentioned that 5 months ago is January, 6 months ago is December. So coins are about to transition. You can see that we've essentially had this belling out of this 3 to 6 month, right? So 3 to 6 months has been increasing. What I'm hoping to see over the next month is this 6 to 12 month band start to also expand. Because what that will tell us, and you may be able to see it here, it's a little bit refined. Let me zoom in nice and close, see if we can pick it up. There is early signs that this is starting to bell out, right? So it is very probable that we're about to see our 6 to 12 month band start to expand. And overall, that's going to be a very, very positive sign. If that's the case, it means that most of the coins that were purchased back in the early bull, December, November, January, that realm, they are essentially still being held, right? So I think most institutions that have stepped into this space and accumulated are probably going to sit tight and hang on to their coins. We will have to wait and see. But overall, That's the things I'm looking for. I'm looking for, are we getting a whole lot of supply going to profit on a relief rally? Are we seeing older hands step in and start spending on that relief rally? And if they don't do that, that's telling us a very bullish sign. And if we do see it further downside, at the moment, I believe that it's going to be driven by these short-term holders who are really driving this. They're underwater and they're taking hits. So that's my overall view on what's going on. So hopefully that's an insight into where we are. We're really at the tipping point where we're questioning, are we in a consolidation or reaccumulation phase, or are we essentially at the start of a bear market? I think from a technical analysis perspective, some kind of relief rally is probable. And I think what we see on most of these metrics on that bounce will tell us a huge amount about how much accumulation happened. My gut feel is that we need to have that bounce. It's probably more bullish than, at least in the short term. If we continue to get driven lower, probably not a great sign. And really, let's just close out by what the bottom of this range is. I mean, basically, if we lose 30,000, it's probably not a great sign, right? So we're kind of building up this consolidation phase in this this volume node. We really don't want to be getting to the bottom range of this 30,000s. If we do, maybe there's some opportunities for short swings. But my general view is that this is an opportunity for people who are hodlers. People who are stacking sats, it's a great opportunity in my view. I'm following the old hands, right? Seeing the breakdown of these long-term holder metrics. I mean, this is substantial. They are just not spending, right? And we're actually getting down below the range of where we were on all of them. Binary Coindays destroyed. I mean, this thing is just collapsing. So this is a very, very positive sign. That's what I'm paying attention to. And, I'm really looking at these metrics and saying, last cycle's buyers are not selling. And that's really the side of the equation that I want to be on. So I hope you all have a good weekend. I'll catch you in the chat rooms. And we'll be paying close attention to this as we move forward. Cheers.